Welcome to another episode of In Studio with Max and Micci. Today we are setting our sights on a massive, almost invisible shift that's happening right in front of us in the financial sector.
Yeah, it's a huge shift.
It really is.
Yeah.
And we want to establish something right out of the gate here. Digital transformation in microfinance isn't just about, flashy innovation.
Right, or just rushing to the cloud because everyone else is.
Exactly. It is fundamentally about protecting the human element of lending.
Which is honestly a perspective that often just gets totally lost in all the hype.
Oh, absolutely.
We tend to fixate on the software, the processing speeds, the fancy algorithms, but technology is really just the vehicle, the actual destination. Like the entire point of this industry is financial inclusion.
Right. And to really understand what that looks like in practice, I want you to picture someone. Let's call her Maria.
Okay.
She's a spaza shop owner in South Africa. When you envision her shop, I want you to picture a counter that's just stacked high with absolute daily essentials.
Right, so we're talking like maize meal, cooking oil, bread.
Exactly.
Yeah.
Maybe a rack of prepaid airtime vouchers right at the front.
It's that kind of informal retail hub that, serves as an absolute lifeline for millions of people across the country.
Yes. Businesses like Maria's are the undisputed backbone of the economy. They operate on really tight margins and high volume.
Yeah, constant turnover.
Right. But Maria has always faced this one distinct, super frustrating roadblock. Her ambition to grow her shop has just always completely outpaced her access to capital.
Well, because the traditional banking sector simply wasn't built for her.
No, not at all.
Traditional banks, they want years of audited financials. They want formal collateral.
Right, the paperwork.
Exactly. They want a predictable salaried cash flow. And Maria, she deals in daily cash.
Yeah.
So getting a quick loan to, say, buy bulk inventory before a busy holiday weekend, historically, that was a really slow, grueling process filled with endless paperwork.
Right. But recently, something shifted for Maria. And it wasn't her drive that changed. She's always been a hustler. What changed was the sophistication of the credit provider she actually partnered with.
Okay, how so?
So she needed capital for the morning rush. Her loan application was processed, the risk was assessed, and the funds were approved so incredibly fast that she was quite literally back behind her counter serving customers before that morning rush even ended.
Wow. That kind of turnaround time is practically unheard of if you look back at how microfinance operated even just a decade ago.
Totally.
It completely changes the velocity of money in a community.
It does. Okay, so I want to pause right here because Maria's really seamless experience. It reminds me of a really good magic trick.
A magic trick? How so?
Yeah, think about watching like a master illusionist. When they perform a trick, it looks completely effortless to you and the audience, right?
Just a flick of the wrist.
Exactly. Flick of the wrist, and it just happens seamlessly. But to pull off that simple, elegant illusion, there's a massive, highly complex machinery working flawlessly behind the curtain.
Right.
The harder the trick, the more mechanisms are, spinning out of sight.
That's a brilliant way to frame it. Because achieving that level of speed and accuracy for someone like Maria, especially in today's regulatory environment, is incredibly difficult.
It's a heavy lift.
It really is. It's not just a matter of a lender pressing a green approve button on a screen.
Yeah, if it were that easy, everyone would just be doing it. But they aren't. So what is actually happening behind that curtain?
Well, let's look at the reality of 2026. Running a compliant, competitive microfinance operation right now is an incredibly heavy lift. It demands far more than just the good intention to help local entrepreneurs. You really have to balance this aggressive market demand with an intensely strict regulatory framework.
So let's talk about that market demand first, because we've got some staggering data for 2026. And this is exactly the kind of stuff we love unpacking here on the In-Studio program.
Oh, absolutely.
Right now, 59% of South Africa's SMME sector, that's small, medium, and micro enterprises, 59% is projecting moderate to strong growth.
And just to put that into perspective for you listening, 59% is a massive portion of the market. We are talking about hundreds of thousands of businesses actively looking to scale.
Looking to hire more staff.
Exactly, or increase their inventory.
Right, which translates to a real-world urgency. The demand for accessible credit isn't just high, it's immediate.
Yeah.
Like if Maria wants to buy extra flour because a local festival is happening this weekend, getting approved for a loan next Tuesday is, well, it's entirely useless to her.
Exactly. But here is the major friction point. The institutions providing that capital are operating under immense, almost crushing pressure from regulators to ensure they are lending responsibly.
Which is a tension we talk about a lot. How do industries balance the intense pressure for rapid growth with the really heavy weight of compliance?
Well, in microfinance, that weight is heavier than almost anywhere else.
Oh, for sure.
Let's just break down the sheer volume of what a credit provider actually has to do to legally approve Maria's loan. First, they are dealing with SAC-RA submissions.
Okay, wait, stop right there. For anyone listening who doesn't live and breathe South African finance, what exactly is SAC-RA?
Right, sorry. It stands for the South African Credit Risk Reporting Association.
Okay.
Basically, it's a massive data sharing mandate. Credit providers have to constantly feed accurate, standardized data into the system so that the entire financial sector knows exactly who owes what.
And who's defaulting?
Exactly. It prevents consumers from taking out, say, 10 loans from 10 different places and bankrupting themselves.
So it's vital for a healthier economy, obviously, but it requires a massive amount of data wrangling from the actual lender.
Correct. But wait, there's more.
Of course there is.
They also have to navigate really strict NCR regulations. That's the National Credit Regulator. The NCR demands these rigorous, mathematically sound affordability assessments.
Meaning the lender has to prove, with a rock-solid paper trail, that lending this money won't financially ruin the borrower.
Precisely. They can't just, trust their gut. They need hard data. And on top of that, if the lender operates in multiple areas, they are managing complex multi-regional reporting.
So every single time Maria asks for a quick inventory loan, the lender essentially has to perform a full financial and legal autopsy.
Yeah, that's one way to put it.
I have to be honest, listening to this, it sounds like credit providers are being forced to run a competitive marathon, but they're being asked to fill out complex tax returns at the exact same time.
That's arguably the best analogy for the industry right now. They're running full speed to serve the client, but constantly looking down at their clipboards to make sure they aren't tripping over a compliance hurdle.
But doesn't that inherently pull them away from their actual job? I mean, if I'm a loan officer, my job is supposed to be helping people like Maria grow her business.
Right.
But if I'm spending, 80% of my day formatting CSV files for a regulatory submission, I'm not a partner anymore. I'm just an administrator.
And that is the exact trap so many institutions fall into. The weight of all that complexity quietly drains the human connection right out of the process.
Yeah.
When lenders get bogged down in processing, they simply cannot focus on partnering.
Which brings us to the ultimate question.
Mm-hmm.
How do you survive that? Because obviously the NCR isn't going away.
No.
SAC-R isn't going away. Consumer protection laws are only going to get tighter, if anything.
They definitely are. You can't change the rules of the game, which means the infrastructure you use to play the game has to radically evolve. I mean, you can't just hire armies of compliance officers without eventually going bankrupt.
Right. And this is where we really need to look at Mycomax, because they represent a fundamentally different approach to solving this exact problem.
Yes. And to understand why their approach actually works, you have to look at their history. Mycomax has a 35-year legacy in this space.
Yeah, I was reading up on that, and that legacy feels so crucial. They didn't just build some flashy Silicon Valley app and try to, force it onto a spaza shop.
No, not at all.
They built their infrastructure from the inside. The team is made up of people who never actually left the microfinance sector.
That's a really critical distinction. A lot of fintech companies, they take generic off-the-shelf banking technology and they try to awkwardly adapt it to microfinance after the fact.
Like putting a square peg in a round hole.
Exactly. Because microfinance isn't traditional banking. The risk profiles are totally different. The turnaround times have to be different.
So Mycomax saw the marathon, they saw the tax returns, and they engineered a way to handle that entire administrative burden invisibly.
Exactly. They asked the question, how do we create an environment where the lender can focus 100% of their attention on Maria, while the system just handles the regulatory nightmare in the background?
Okay, let's get into the mechanics of that, because this is where the magic trick actually happens. How do they achieve that invisibility?
It revolves around their flagship loan management system, which is called Max Money.
But let's be clear for everyone listening right now. When we say loan management system, we are not talking about a standard piece of standalone software that you just, install on a laptop.
Oh, far from it. Calling Max Money software almost does it a disservice. It functions much more like a living ecosystem.
I love that phrase, living ecosystem. But unpack the technical reality of that for me. How does a living ecosystem function differently than normal software?
Well, it means that all the necessary external tools, the things you usually have to open different tabs or entirely different programs for, are natively integrated right into the platform through APIs.
Okay.
So, for instance, it natively integrates with debit check payment partners.
Wait, let's quickly define debit check for a second. That's the mandated system in South Africa to stop rogue debit orders, right? It requires the consumer to digitally approve the mandate on their phone before the lender can collect any money.
Exactly. And in a normal setup, a lender might approve the loan in one system, then they have to log into a separate banking portal to initiate the debit check mandate.
Then wait for the client to approve it.
Right. Wait for the approval and then manually record that approval back in the first system.
Which introduces so many delays, human error, and just endless frustration.
Right. But in a living ecosystem like Max Money, that happens natively. The lender doesn't switch screens. The system talks to the payment partners autonomously. It also hooks directly into the major credit bureaus.
So what does that actually look like in real time? If I'm the lender sitting across from Maria and I type in her ID number, what is the system doing?
In milliseconds, it is pinging the credit bureaus. It is pulling her history, running the NCR-mandated affordability algorithms, and generating a complete risk profile.
Wow.
Yeah, by the time you hit enter, the system has already written the compliance audit trail.
That's incredible. So the complexity is completely hidden from both the lender and the borrower.
And it goes a lot deeper than just speed, you know? It's about security. The system handles role-based access controls automatically.
Meaning?
It ensures that junior staff can't accidentally approve loans above their pay grade. It maintains robust, completely unalterable audit trails for every single action taken on an account.
So if an auditor shows up, like 6 months later,
Yeah.
and wants to see exactly how Maria's loan was approved, the lender doesn't have to go digging through old filing cabinets.
Exactly. The entire history is perfectly preserved and instantly accessible. The system was designed from the ground up to meet the highly specific, rigid standards of a regulated industry.
Right.
It doesn't have to bend, break, or use messy workarounds to comply. It just complies by default.
Which fundamentally changes the job of the lender. I mean, if the system handles the data entry, the background checks, the payment mandates, and the compliance tracking, the lender stops being a data entry clerk.
Yes.
They actually get to be a true financial partner to the community.
Yeah. But here is the thing. Solving the problem inside the office is really only half the battle. The innovation can't stop at the office door.
No, it absolutely can't. And this is a vital point for microfinance. To truly serve developing communities, your credit providers cannot be chained to a physical desk in some air-conditioned building in the city center.
No, they have to be out in the field, walking the streets, visiting the farms, standing right there in the spaza shops.
Which brings us to the Max app. This is how the power of that entire Max Money ecosystem actually leaves the building.
And the footprint here is huge. The Max app is currently operating across South Africa, Namibia, Zimbabwe, Zambia, Botswana, and Eswatini.
That's 6 different countries, which means 6 completely different regulatory frameworks, varying levels of infrastructure, and vastly different geographic challenges.
Yeah.
But I really want to emphasize something for you listening right now. When you hear mobile app, you might think of a stripped-down, simplified tool.
Right, like elite version.
Exactly. But the Max app is not elite version of the desktop software.
Not at all. It carries the absolute full power of the core loan management system directly into the field.
It's not just giving the lender a digital notepad to jot down Maria's details and take them back to the office later. It's quite literally like putting the entire bank vault, the compliance office, the legal department, and the filing cabinet straight into their pocket.
But surely, you might ask, doesn't putting all that power on a smartphone introduce massive risk?
That's exactly what I'm wondering. If I'm holding all that capability on a phone in the middle of a crowded market, isn't that a compliance nightmare waiting to happen?
It would be if the app were poorly designed. But the Max app operates without compromising a single ounce of accuracy, security, or regulatory rigor.
Oh, wow.
Yeah, it uses the exact same multi-tier security and role-based access as the desktop system. It talks to the exact same cloud ecosystem.
Meaning the lender can run the credit bureau check, verify the affordability, initiate the debit check, and officially approve the loan while physically standing inside Maria's shop.
Exactly. They meet the client exactly where the client is. They don't force Maria to, close her shop for half a day, spend money on taxi fare, and sit in a sterile waiting room just to fill out paperwork.
That is the very definition of untethered. It's the full weight of institutional finance, completely untethered from the desk.
And that untethering brings us right back to the human element we started this entire conversation with.
It really does, because when the technology is powerful enough to handle the heavy lifting quietly in the background, the human relationship finally has the oxygen it needs to thrive.
Exactly. Technology shouldn't be the focal point of the transaction. It should be invisible.
I was reading a piece of commentary from Mycomax CEO Charles de Villiers, and he makes a point that perfectly encapsulates this entire philosophy.
It's a perspective that really challenges the typical tech bro mindset, isn't it?
Totally. He notes that true innovation in microfinance isn't actually about the technology at all. The mission isn't to build the flashiest app. Right. The mission is to remove the barriers and simplify the complexity, specifically so that you can empower people.
Because by taking away the administrative burden, you enable credit providers to focus on lasting partnerships that drive real, tangible impact in the community.
Yeah. He makes the profound argument that technology's highest purpose is to protect the human heart of microfinance rather than trying to, automate it away or replace it.
That is an incredibly powerful distinction. I mean, we see so many industries trying to use AI and automation to just replace human interaction entirely.
Yeah, all the time.
But financial inclusion is fundamentally a people story. It requires trust, empathy, and context that an algorithm simply cannot understand.
Right. An algorithm doesn't know that Maria is the hardest worker in the township.
Yeah.
An algorithm doesn't see the foot traffic in her store.
Exactly.
It relies on the human credit provider being willing to go out and meet her, backed by a platform that is sophisticated enough to make that meeting fast, safe, and compliant.
The right system protects that human commitment. It doesn't overwrite it.
And when you look at Mycomax's 35 years in the trenches, it becomes really obvious that this philosophy, invisible tech, human-first lending,
Right.
remains the only kind of innovation that truly matters.
It really serves as a remarkable blueprint, not just for the future of microfinance, but for how we build systems in general.
Well, as we wrap up today's conversation on In Studio, we want to leave you with a final thought. We've seen how powerful this can be for lending.
Right. And it raises an important, really provocative question for all of us looking at the broader economy.
Mm-hmm.
If the ultimate triumph of technology in a highly complex field like microfinance is to become completely invisible so the human relationship can thrive, well, what other highly regulated industries in our lives desperately need this exact same approach?
It's a fascinating thought experiment.
Yeah.
I mean, imagine how our healthcare system could change if doctors weren't spending half their appointments typing into portals.
Oh, absolutely.
Imagine how education might transform if teachers' administrative burdens simply vanished into the background, leaving them free to just teach. The invisible tech people-first approach could rewrite everything. It is definitely something to ponder as you go about your day.
Absolutely.
Thank you so much for joining us. Please be sure to subscribe to the In Studio podcast on Spotify and YouTube so you never miss a conversation. Until next time, keep looking beyond the surface.